Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals and driving the markets currently. So Peter, a new day, a new week, how have the markets been behaving?
Well, we had the US dollar, which was on the rise. The US dollar was supported practically by Fed Chairman Powell's comments in the Jackson Hole Symposium on Friday. The Fed Chairman practically stated, or if you prefer, reaffirmed the bank's intentions to continue to tighten its monetary policy in a rather aggressive manner. More or less, I would also note that the second important element of the speech was that he practically warned that there would be more pain for households and businesses alike. The third element would be that Fed policymakers seem to be quite conscious that the Fed's tightening of its monetary policy is going to hurt growth in the US economy. However, they seem to have no other option. They have to curb inflationary pressures before it's too late. And I would also note that US yields seem to have now an inverted curve, given that the 2-year yield has risen above 3%. So the warnings for a possible recession seem to be increasing. I have to note here that overall the market sentiment seems to be quite bearish. On the other hand, the US dollar seems to be enjoying safe haven inflows and support, given also that monetary policy outlook favor the Fed, thus the US dollar as well.
And what was the effect for the US stock market?
Well, the US stock markets dropped, and it's understandable. If the Fed continues to tighten its monetary policy, that would mean less opportunities for business development and less opportunities for profitability. That could be reflected also in the earnings results for Q3 and Q4 this year. So we would say that it's a justifiable reaction by the market, selling off practically stocks, and we may see that being continued over the coming months. For the time being, we see any correction high of US stock markets as merely a correction. Overall, the tendency most probably is going to continue to be bearish.
And how about the gold price?
Gold prices, or gold's price to be more exact, had a negative correlation with the US dollar. It was on display once again. And definitely the strengthening of the USD tended to weigh on gold's price, which dropped even lower. Mind you that the US dollar index has reached a 20-year high and surpassed it. So it's understandable that given that the precious metal is denominated in US dollars, its price has dropped.
And how have oil prices been behaving?
Oil prices have been behaving rather independently from the event. I would dare to say that oil prices, WTI prices, were on the rise during today's Asian session. They are escaping, or at least they seem to be escaping, a sideways motion which characterized them. On a fundamental level, I would be highlighting the worst of the market for possible OPEC's production cuts. At the same time, there seem to be some indications of increased demand. So both combined, should they be extended during the day, may push oil prices higher.
And what's on the calendar for the day?
We don't have any high impact financial releases today. We would expect more or less fundamentals to drive the markets. However, I would dare to note from Japan during tomorrow's Asian session, the employment data. Despite not being a market mover, it's important to keep an eye out over Japan, given also that USD JPY has reached very high levels. And it's about to break record high levels, and which may push it towards 140, a level which could prompt Bank of Japan to intervene in the market.
And how about the rest of the week?
Now, for the rest of the week, I would be highlighting practically 4 events, or 4 releases if you prefer. The first would be from China, and that would be the manufacturing PMI figures for August. We have the National Bureau of Statistics and the Gaixing manufacturing PMI figures, which, should they drop below the reading of 50, could imply another contraction of economic activity for the sizable Chinese manufacturing sector. The second would be Europe's HICP rates. They are the preliminary rates for August. And we have Germany's, France's, and the Eurozones, which we are focusing on. Most probably, or if you prefer, forecasts are for the rates to accelerate further. And mind you that the acceleration should occur, it will occur after the ECB has already had its first rate hike. Also, I would be highlighting Isabel Schnabel's ECB board member comments, which were made on Friday or Saturday, and where she stated that banks would have to continue on a very, very tight monetary policy in order to curb inflationary pressures. Given, or if you prefer, should European inflation rates actually accelerate further, that would be another sign which could increase the possibility of a 75 basis points rate hike in ECB's next meeting. And I would be also highlighting from the US, the ISM manufacturing PMI figure. It's for August. Should it rise, we may imply more or less that economic activity in the US manufacturing sector was on the rise. And that could provide some support for the US dollar. However, the crown of financial releases will be at the end of the week. It's the US employment report. For August, for the time being, the NFP figure is expected to drop heavily to 285K, while the unemployment rate is expected to remain unchanged at 3.5. Now, how do we read this? On the one hand, we have an unemployment rate which remains at very low levels and implies that the US employment market remains rather tight. On the other hand, though, the drop of the NFP figure, despite a correction lower, would be understandable, would still pose some questions about whether the US employment market will continue to tighten, but nevertheless, 285K is a good figure. So overall, I would expect the US employment report, should the actual readings, rates and figures, meet their respective forecasts, to provide some support for the USD. Definitely, it would allow the Fed to continue to tighten its monetary policy at a fast pace.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter.
So, welcome to the technical analysis part of the presentation for today. Let me make it smooth seating, that's better. Now, for today, we had a rise of the US dollar. What you're seeing in front of your screen is the US dollar index. It's the 4-hour chart. All of our charts will be in the 4-hour time frame, unless otherwise stated. Now, the US dollar index seems to have bounced on the upward trend line, which was incepted since the 11th, 10th of August. So we see the upward motion being continued. Note the positive gap at today's opening. We see that the price action has surpassed the resistance line of 109 and is now just above it. So that turns the resistance line to a support line. Overall, we tend to maintain a bullish outlook for the US dollar index. On the other hand, we should note that the RSI indicator, despite rising, almost reaching the reading of 70, has now started to correct lower, and that's being reflected also in the price action. Also, the price action seems to remain just above the upper Bollinger Band. So practically we see a correction taking place right now, which could be extended yet for a bearish outlook. We would require two elements. A, we would require the correction to break the upward trend line. That would be the first signal that the trend has changed. And definitely we would require also breaking of the 107.20. But that's still far off. For the time being, we expect, and as long as the price action remains above the upward trend line, we maintain our bullish outlook. And for the time being, I wouldn't be surprised to see the index dropping, correcting a little bit lower, bouncing on the upward trend line, and rising once again, aiming for the 111. Let's have a look at Euro USD. Euro USD, which dropped heavily, it's a chart we haven't seen for a long time. Let's make the necessary corrections. This would be a nice support line. Could be a little bit higher. I'm keeping it. And it's being placed at 0.99 in green. Let's do it. Let's go hunting for more support lines. But we have to note title level has not been broken practically. Yep. So we're going to have to readjust based on the movement. I'm going to be moving in 100 pips intervals. Green, please. In red, the parallel level now becomes the first resistance line. Okay, we could correct it a little bit lower, somewhere here. That would be at 1.0095. And the next resistance line somewhere here. These levels here. That would be the 1.02. Let's widen this. Let's correct the labels as well. Okay. Starting with the final resistance line would be placed at 1.02. The second resistance line to be placed at 1.0095. The first resistance line now being placed at parallel level 1. First support line being placed at 0.99. Second support line being placed at 0.98. And final support line being placed at 0.97. Now let's make an assumption about the direction. Now we have a downward trend line which was guiding the pair, which seems to have been broken. So we switch our bearish outlook in favor of a sideways movement initially, probably between parallel level and 0.99. Someone which would be a little bit more optimistic could discuss also the R2 as a resistance line being the 1.0095. For the time being though, I would restrict the sideways movement initially between the parallel level and 0.99. Okay. Should the bulls take over, I wouldn't be surprised to see the price action of Euro USD rising, breaking parallel level, start aiming for 1.0095. On the flip side, should the bears regain control over the pair, we may see it breaking the 0.99 support line and start aiming for 0.98. That should be about it. Let's have a look at cable. Oh my god, that's low. Okay. Have to make readjustments here, definitely. Making it from scratch. 1.1645. Daily chart of cable drilling out. Yeah, that's valid. You see the levels here. Touches. And that would be the 1.1450. Green, please. Let's have another look. Yep, level not seen before. Okay. Definitely seen before, but not in our chart. 0.30. Okay, let's make the necessary corrections on the resistance line as well. I'm keeping this one, but this one could be set a little bit lower. Somewhere here. See the touch here and here. So that's being placed at 1.19. And we have touches here, here. That seems to remain pretty valid, and that would be the 1.2070. Okay, let's correct the labels as well. Widen a little bit. So that's it. Okay, let's have a look at the direction first. We see that there has been a downward motion, very clear. And actually, in my opinion, despite the stabilization here, the downward motion began somewhere here. And we can see that if we draw a downward trend line, there it goes. So there was this stabilization which actually broke this downward trend line, or even more intense. This one. But it was renewed, and the peaks here practically serve as a reminder. So I tend to maintain a bearish outlook. Also, the RSI indicator has just reached the level of 30, implying a bearish sentiment for the pair. At the same time, note how the price action dropped steeply, and at some points even below the lower boundary of the Bollinger Bands. It's cracking a little bit higher right now. And that would be another indication. So we have practically, definitely a downward motion. That's one. On the other hand, though, there seem to be signs for a correction higher. And that would be evident more on the RSI indicator and the Bollinger Bands. So I wouldn't be surprised to see it correcting a little bit higher above the 1.1645 and start aiming for the 1.1755. For the time being, though, a bearish outlook is being maintained. Should the bulls take over, I wouldn't be surprised to see the price action rising, breaking the 1.1755, probably breaking also the downward trend line and testing the 1.19. That would be a bullish outlook in my opinion. Should there be some kind of stabilization in similar to the one in the previous days, from 22nd to the 26th of August, I would expect the price action to remain between the 1.1755 and the 1.1645. A bearish outlook, which would be a continuation of the downward motion, would imply practically a breaking of the 1.1645 support line, which practically leveled the price action here. But that would signal that the gates are open for the 1.1450 support barrier. Nice. Let's have a look now at USD/JPY. USD/JPY, which despite a correction, a stabilization here, that would be from 22nd to the 26th last week, I see the upward motion being continued. And we tend to maintain a bullish outlook for the pair. There was a steep rise on Friday. Both characteristic, if we drill out to the daily chart, clear upward motion, that's today, note on Friday as well. So the upward motion seems to be continuing, given that the candlestick in the European session has almost equaled the one of the whole of Friday. Yet, on the other hand, seems to be correcting a little bit lower. Okay, that's plausible given that the price action has surpassed the upper Bollinger boundary, while on the flip side, or if you prefer in a similar motion, the RSI indicator has broken above the reading of 17, is correcting slowly lower. But the fact that it remains clearly above 70 tends to imply that the bullish sentiment is not over yet. Also note how the median of the Bollinger Bands, the 20 moving average, has practically risen up, while at the same time the two boundaries have widened, diverged. Also a sign of increased volatility, while they were at a tighter range here, where it was stable. Let's make the readjustment. Let's have a look. So, A, we tend to maintain a bullish outlook for the pair, as long as it remains above the upward trend line. B, should the bulls maintain control over the pair, I wouldn't be surprised to see the price action of USD/JPY breaking above the 139.40 and start aiming for the 141.50. Note how beautifully the 139.40 provided resistance here. Mind you that the R1 level is, I wouldn't say an all-time high, but still a 5-year high. So pretty much, oh yeah, it's more than that. It's an almost 15-year high, if not even more. So that's another issue which should be taken into consideration, and whether that's going to allow the bulls to maintain their control over the pair. It's definitely going to make harder any rise above 131.40. On the other hand, should the stabilization occur, I would expect it to remain between the 137.45, which provided the resistance here and here, yet support here. So it was a quite valid level. On the other hand, to the upside, I would note the 139.40 as an upper boundary. Should the bears take over, I would require a clear breaking of the 137.45. Actually, I would also require a clear breaking of the upward trend line mentioned before, and the pair to start aiming, if not even testing, the 135.55 support level. Provided support, resistance here, support here, and resistance here as well. Once again, for the time being, we maintain a bullish outlook. Let's have a look now at USD CAD. Or before that, let's have a look at another safe haven currency, that would be USD CHF. USD CHF, which rose a little bit, but seems to be correcting lower. So I wouldn't be surprised to see stabilization occurring. But definitely these levels need some readjusting here. And I would place it somewhere here. And also, okay, let's make support line here. That's a channel. And we have another movement here. And another level here. To the downside, one would be here. And another one here. It's a little bit wide, I know it, but it could break it. It could cover the distance easily within one day. It's characteristic. If we drill out to the daily chart, that would be more obvious. See how practically the movement is wide enough for the channel to be filled. Back to the 4-hour chart. Let's make the necessary corrections here. That would be the 98.80. The second resistance line is being placed at 0.9785. First resistance line being placed at 0.97. First support line being placed at 0.9610. Second support line being placed at 0.95. Sorry. Yeah. Correct it here as well. And final support line being placed at 0.9370. I know it's an even. Sorry about that. Didn't correct it. Let's lock this in. There we go. Let's lock everything into place. Okay, so we have it. Let's start with the direction recap. Now there was a clear upward movement of the pair from the 11th of August up until the 23rd or about, and it would be more indicative with an upward trend line. Yeah. Which definitely has been broken now. So that's out of the question. For the time being, we maintain a bias for sideways motion given that the pair rose yesterday, on Friday, sorry, yet proved unable to break above the 0.97 resistance line. So we see that the stabilization takes place between the 0.97 and the 0.9610. That's our channel for now. For a bullish outlook, I would require clear breaking of the 0.97 and for the pair to start aiming for 0.9785, if not tested. Other than that, should the bears take over, I would require the pair to drop, break the 0.9610, and start actively aiming for 0.95. I wouldn't expect to reach it, but still I would like to see a clear downward motion, probably with lower peaks and lower troughs. It's interesting how differently safe haven currencies have reacted against the US dollar strengthening. Let's have a look now at commodity currencies. We make a start with USD CAD. USD CAD, which rose, yet respected the 1.3075 resistance line, so we're keeping this. However, this should be changed into support line. This could rise a little bit here. Another support line. Let's make the readjustments here as well. We have a fresh low which seems to be valid. Let's go hunting a little bit for resistance lines now. Definitely we have one here. Could be here. Yep, on the peak. Let's go hunting now for a new ultimate resistance level, if there is one, which doesn't seem to be the case. Weekly. This is a weekly chart. Nada. Oh yes, there is one. Yeah. It's back in 1021. Okay. Drilling them back down. Daily chart. Seems to be verified here. Could be a little bit lower. You have 1, 2, 3, 4 touches. That's good. And red 1.3350. Okay, drill down to the 4-hour chart, readjusting. Second resistance line, 1.3220. $1.3075 being tested right now as we're talking. Quite interesting because it's a level which, if it's broken, that could signal a renewal of the bullish tendencies. 1.2945, first support line. Second support line being placed at 1.2830. Final support line being placed at 1.2725. And it seems that the pair has stabilized, as it seems for the time being at least unable to break the 1.3075. So we see that there is an upward motion which had started around the 10th of February. Here it was, and it has been broken. There is some stabilization, albeit we have to note that Friday was, wow, there was some choppy trading here. For the time being, I would maintain a bias for sideways motion between the 1.3075 and the 1.2945. It seems that the price action of USD CAD is correcting lower after breaking just above the upper Bollinger Band. Also, it aimed for the reading of 70. It didn't actually quite reach it and has started to correct a little bit lower. So probably stabilization between the two levels, the R1 and the S1, could be expected. For a bullish outlook, I would require clear breaking of the 1.3075 and the pair to start aiming the 1.3220. On the contrary, a bearish outlook could occur only if the pair drops widely, relents the ground gained on Friday, breaks below the 1.2945, and moves even lower towards the 1.2830. It's an interesting chart. Let's also have a look at the Aussie before we leave. Okay. Intense downward motion, similar to that of USD CAD, only in the reverse. However, that corrects higher, even more intensely. Another one here. No, that's too wide. Somewhere here. That's another one. Okay, let's place them to 0.68 in green. 0.6735, also in green. 0.6880 in red. 0.6945, also in red. And finally the 0.6995 in red as well. $68.40, $0.6885, and 0.6945. And 0.6995. Now we have a strong downward motion. There is a correction higher here. However, I wouldn't be surprised to see the AUD/USD continuing its downward motion, breaking the 0.6840, aiming if not breaking the 0.68, and this could prove to be just a mere correction. Now you ask about, Alison is asking from Malaysia about USD JPY. We already covered this, but let's go back a chart. Here it is. We tend to maintain a bullish outlook for the pair. However, I would highlight 131.40 as a resistance level. It's a record high practically, and that could pose some problems for the bulls. But overall, the bullish outlook seems to be maintained despite the stabilization here. Also, I would be noting that a correction lower could take place given that the RSI indicator has reached above the reading of 70 and seems about to correct a little bit lower. I hope that answers your question. From my side, all the best for solid trading.
My name is Christina, and today we will talk about the forex spot rate. The forex spot rate, or FX spot rate, is the costs for selling one currency to buy another for immediate delivery. There isn't a one spot rate, but two rates or prices when opening a trade. A trader can buy at the ask price or sell at the bid price. The exchange rate for a currency pair usually refers to the mid price, which is the average between bid and ask. The exchange rate on a spot FX transaction will be higher or lower than the average price, depending on whether it is filled at the bid or ask price. While large players in the interbank FX market, such as banks, have the power to negotiate and change market bid and ask prices through trading activity, smaller players, such as retail trade, are more likely to have the price they are offered. For example, business and individuals trading currencies through a bank or broker will be quoted a wider spread than the interbank market spread. When we refer to a spot transaction, we don't really mean instantly, but on the spot, in other words, on the settlement date. The settlement or value date is the date when the funds are exchanged. This happens 2 business days after the transaction or trade date. This is stated as T+2. Some currency pairs have different settlement dates. For example, the settlement date for USD against CAD and USD against TRY is 1 business day later than the transaction date, or T+1. The Chinese yuan and Russian ruble can both settle on the trade date, or T+0, though it is usual to be settled 1 business later, T+1. When we mention business days, we exclude Saturdays, Sundays, and legal holidays in other currency of the traded pair. Spot FX traders may have a settlement date, but most traders don't want to settle. Since traders want to profit from exchange rate differences on their transactions, they choose to roll over transactions on the settlement date. To do so, they close the transaction at the closing price and reopen it within the next day's opening price. This allows them to extend the settlement date by 1 day. Usually, brokers do this automatically. This type of FX swap, which is used to roll over position, is what is known in forex as the tomorrow next or tom next. This involves simultaneously entering into buy and sell traders with settlement 1 day apart. Thank you for watching.
Good evening, guys. Welcome to another session of IronFX. Hi, Gideon. Hi, Samuel. Nice to see you guys. Hi, Kurt. Hi, Kurt again. Welcome back. So I'm Annabelle. I will be your host for today's session. Hi, Kurt. I will be imparting some of the Fibonacci extension skills to you guys. This is only my 2nd webinar, so please bear with me. Keep those questions and posts coming in on the chat. I will reply as accurately as possible. Hi, Aisha. So how are you guys on a Wednesday? It's TGIW midweek. So I'm here 6 p.m. Singapore time, while everyone else is just chilling, having a glass of wine or beer, relaxing. Let me know what you're up to. Hi, Kingsley. Let us give the rest of the participants some time to come in before I start the session. 11 a.m. here. Oh, where are you from? Yeah, let me adjust the table. Oh, England. Hi. Oh, I've been there. I used to study in England. Hi, Waliu. Hi, Adeyemo, if I pronounce your name correctly. Oh, thank you. Nigeria, I see. Hi. Hi, Kingsley. So maybe 2 more minutes. Keep the questions coming. I will try to reply if I have the time. Today we'll be going through extensions. I will do a quick recap on Fibonacci retracement because we have done that the previous session. I'll do a quick recap before we start the next session on extensions. Hi, Kingsley. Oh, from Nigeria. Nice to see you. Sorry, I think I got cut off. Okay. Let me know if you can hear and see me. So if at any point in time you can't see or can't hear me, do let me know. Let me adjust. Sorry. It is better. This might be better. Okay, maybe we can start the session. So this webinar series is brought to you by IronFX. We are talking about the second part of the fourth Fibonacci extension. So just a risk warning. The information in this webinar should not be construed as investment advice or an investment recommendation, but educational material only. So this should not be construed as investment advice. Please practice your due diligence. Let me adjust, sorry. You can see my face. Okay, there are two Samuels. Hi, both. Okay. So the agenda for today will be quite long. We have the ideal market structure, following the trend. These are all important and fundamental skills that we should be touching on and recapping a lot of this for your retracements and analysis tool, because these are the basics that you need to master before you can do your extension, expansion, and projection. So following the trend line, the different retracement levels, your Fibonacci extensions, Fib levels above 100%, which is your extensions, some practices, and then I will talk to you guys a bit about the combining of Fib retracements, meaning we'll put together all the different retracement tools to make your trade more accurate. So let me know if you guys have used the retracement tool before, Fibonacci, either the extension, the expansion, or the projection. So let me know how professional or maybe if you guys haven't heard of this tool before, do let me know in the comment section. Gideon, I haven't. Yeah, so that's why this will be a beginner's educational video. I'll try to be as slow as possible to explaining all the different terms or the different levels to you. I'll make it as simple as possible. Okay, Joel, I've used it and it's awesome, but I still need to, okay, yeah, yes, this will be a good session to recap and to learn. Okay, so maybe let me give you a quick reason why people actually use Fibonacci retracement. It's actually a very powerful tool if you can get it correct. It helps you to draw support lines to identify your resistance, support levels, or where you can actually place your entry, stop loss, take profit. So this tool is extremely important and you have to get it right, because if you actually plot on the wrong points or the wrong levels, then it won't be useful. Okay. So this will be the team that will take you through all the webinars going forward. Sorry, my picture is not there, but introducing the team. These are all my colleagues in, okay, yeah, these are all my colleagues in Everest Fortune Group. If you have any, okay, maybe I'll do a brief introduction. So this is Desmond Leong, our chief trader for Everest Fortune. We have Cassandra Ng, prop trader, Melanie, investment analyst, Jianing, and Joanne. So sometimes aside me or Desmond, you will see the rest of the team hosting some of the webinars. So if you have any questions throughout the webinar, I encourage you to send them through this chat. As I have another screen that is open so I can monitor the questions. So it's better for you guys to ask when we are analyzing or when we are going through all the slides, so I don't need to jump back and forth on the different setups. So this webinar is brought to you by Everest Fortune Group in collaboration with IronFX. We are an award-winning research firm and finalists in 2019, 2020, 2021, and the best finalist for equity research in 2020, 2021. So what we do is we work with the major financial institution to help them forecast where the markets are actually going and also help them host educational webinars like this. And now we have a special partnership with IronFX where we bring you guys the good stuff every day. Okay, so let's start the session on extension. Cool. So before that, we need to go through the fundamentals, the most important thing, because you need to know how to draw your basic retracement levels before you can actually go to the extensions. So the ideal market structure. So what I mean by ideal market structure is that you always have to look for significant swings. So these are very insignificant swings that we are looking at. Ideally, for retracement Fibonacci tool, we look at the H1 or H4 charts. So we don't usually dwell into the 15 minutes or even the 5-minute charts, because as you can see here, hi Odofin, hi. As you can see here, if you zoom into the lower time frames, sorry guys, bear with me. Okay, so if you can see, these are very choppy and very inefficient candlesticks. So it's not effective and not accurate in providing your trends or your ideal market structure. So we want to look for significant swings like this, big movements, not the choppy ones, because they will make your levels very messy and inaccurate to read. So we are looking for significant swings like this. Later, I will go to a live chart and then I will show you guys what are significant and insignificant swings. Okay, following the trend. So before you actually look for your Fibonacci levels, you need to know where the general market or the market sentiment is going. So you need to follow the trend correctly. And you also need to draw your trend lines correctly before you can do that. So if the market is going in a bullish trend like this, then we'll be looking for extensions. Okay, so the rule for Fibonacci, if you guys have tuned in last week, do you remember what are the rule of thumb? What is the rule of thumb? I think there are 2 rules that I highlighted last session with you guys that is very, very important. This is a hint. So you can see that the Fibonacci trend line cuts through the price structure. I can give you guys a hint. Let me know. Okay, I have some answer. Yeah, can cut through. Okay, so what we mean by follow the market structure means that when you draw a Fibonacci, you have to draw the trend line close as possible to your price structure. So in this sense, it's not very clean because you see here, there are a lot of gaps. Okay, maybe I can show you guys. So meaning if you were to draw a trend line or a Fib retracement, this would be very accurate. Sorry, let me remove drawings. This would be an ideal Fibonacci retracement level or trend line. Whereas, let me know in the comment section, do you think this is a good Fibonacci retracement level, trend line? Any idea, guys? Okay, this is not an accurate trend line because, yeah, it's not good. Yes. Yeah, this is not good because you can see that there's a lot of space here. So this is inaccurate. For trend lines, Fibonacci trend lines, it's best to draw as close as possible to your prices. It shouldn't deviate too far like this. So this is good because all your prices are very, very close to your trend line. So this is a very accurate Fibonacci retracement level. Okay, so the rule of thumb, like I've mentioned, let me go back to my slides. Okay. So the rule of thumb is that the trend line must follow the price structure clearly instead of cutting across and the price deviate too much. So firstly, you need to understand how to draw the trend line accurately. So this is a very important fundamental skills. You need to draw it correctly before you can learn extension. Okay, yeah, this is a very accurate line, as you can see. So just to highlight, for Fibonacci retracement, it's not just sorry, okay. So for Fibonacci retracement levels, it's not just a one-way direction, meaning it can be from bottom to top or top to bottom, depending on where the market is moving. So it's dependable on where the market is going. It can be from the bottom here, the swing low to the swing high, or it can be from the swing high to the swing low, depending on where the market is moving. So a Fibonacci retracement tool is used to gauge where your next reversal might be. So it helps you to better gauge whether you should take an entry at this level or take profit or put your stop loss. So these are levels to help you identify your support resistance. Okay, different fit retracement levels. So anyone knows what are the different, anyone in the chat knows what are the different Fibonacci retracement levels? Okay, let me show you guys. So the reason why we actually use all the different percentages of the Fibonacci retracement is because all these different tools will help you, when combined, will help you make a successful trade, make your trade more successful. So the range for a Fibonacci retracement can be beyond or below 0 or 100%. So for example, in this chart here, you can see that the range of Fibonacci retracement is from 0 to 100. This is your retracement level. Once it actually breaks above the 100%, we call this the extension. So this is what we are going to learn today. Fibs that are above 100%, they are called the extension, Fibonacci extension. So what if it doesn't break above the 100, but it goes below to the negative range? So you can see here, minus 27.2 and minus 61.8. These are negative Fibonacci retracement, which is called the expansion. So these three tools combined will actually help you identify a more and strong support or resistance level, which you can then place your trade. Okay, so Fib levels below 100%. Yeah, this is what we're going to learn today. Note that once your Fib level goes beyond the 0 to, let me just go back. Note that retracement level only works if it's within the 0 to 100 range. Once it breaks the 0 to 100 range, it's invalid. So let me show you what I mean by that. Okay, let's see here. Okay, let me draw a Fibonacci retracement here. Okay, so for example, for Fibonacci retracement, once you draw the trend line, okay, this might not be the greatest. Okay, let's do this. So once the level has broken 0 to 100, right? You guys can see all the different Fib levels, 0 to 100. Once the Fib level actually breaks, see, it kind of breaks here. And it broke the 23.6, broke here. So now it's coming to test at this level, at the 50%. So this is 50% will be the only one that's valid. So we can take away all this. Those that are broken are invalid. Please take note. Okay, so Fib below 100%, they are called the expansion, which we will learn in the next session. And then there is Fibs that are above 100%. They are called the extension. So this will be what we are learning today. And the important key levels to take note will be 127 and 161. So let us dive into it. I will give you guys some tips as I go along and analyze the charts, right? Okay, let me know hi. Okay, so let me know if you guys have any questions along the way. Just post in the chat and I'll reply. Yeah. Okay, so maybe I start with this chart here. Fib levels above 100%. So starting point will be here. You can see the starting point. So what the number one tip that I will give you when you are using Fibonacci extension, remember it's extension, not expansion. So extension, the tip will be to find the Nike tick. So you can see here, we are always looking for a Nike tick. It can be either this way or an inverted one. So it's not necessarily always a V. It can be an inverted V as well. Sorry, excuse me. So it can be this way, or it could be, let me find one, or it could be this, maybe this way. Okay, so it can be here or here, depending on which price or which levels you are looking at. Yeah. So we are always constantly looking. Oh my God, I'm so sorry. Okay. So let me go to live examples to show you guys how Fibonacci extension actually works. Let's see. Okay. If you have any requests for any currency pairs, do let me know in the chat as well. I can do a live analysis to show you guys using the retracement tools. So maybe let's start with USD. GBP. Okay. Okay, I'll go to that shortly. XAU. Okay, I have some requests. Gold USD, GBP, JPY, GBP, USD. Yes, I will go to that. But maybe I will start with USD, Swiss franc. Yeah. Okay. So for this chart, can you guys identify where is the Nike tick? Is it from, can it be from here to here? And then, maybe I don't use the levels yet. I'll use drawings. Can it be from here to here? Is this an inverse 90 tick? Or can it be from maybe this could be one. This could potentially be one, but it didn't break out of the note. Remember what I thought? What I taught you guys, it has to be above the 100%. So if your retracement is at the 100%, it's not within the extension zone, sorry. It's not within the extension zone, which is above 100. So we don't consider this as the Nike tick, yeah. Okay, we could use, let me find a good example for you guys here. Just bear with me. So remember also that we are looking for significant. Okay, maybe this could be a good setup. Significant swing low, swing high. So this is quite significant. Let's see whether this is what 4 hour. Can zoom in. Sorry, guys. Remember, you're always looking for significant swings here. Let me see whether this works. Okay, yeah, here. Okay, this is quite a good setup. Maybe let me. Okay, let's try this. Okay, so now the trend is actually, remember the rule of thumb and what you should be looking for. So always remember you should go with the trend line. So it's now going on a bearish trend. So it's very strong in its descending channel, in descending trend. So let's see. Okay, what I will do usually when you are looking for a setup for the extension is that it has to create a V, because we are looking for the Nike tick. So always look for the V. And tip number 2 is that it has to break the 100% retracement. Remember? Because if it's still within the 0 to 100 range, it is not considered as an extension. So at this point in time, this level here, when it breaks, it has my attention for this setup. So I will wait for prices to actually reach the 127 or the 138 before I take my entry for a short, because the Fibonacci extension tool or the Fibonacci retracement in general is used for reversals, to spot for reversal setups. So at the key level for extension would be 127 and 138. These are the two that I will highlight. I mean, not all setups works, but you could actually potentially make quite good gains if you can spot the Nike tick. So you move forward. Okay, 127, right? Okay, this is actually where I would take my trade, or maybe slightly higher. So if you want a very accurate indication whether you should take this trade, you should actually look for other tools that can be in line and confirm this trade. For example, okay, it's a bit messy. Okay, never mind. We'll just do this first. Let me show you the example of how the reversal works first. So once it touches the 127, it tends to reverse in the opposite direction. As you can see here, it touches exactly here. And then at the 100% would be the usual spot that I take my profit. So here, entry, and here take profit. Stop loss, give and take, you should, depending on your risk appetite. Yeah, yes, I'm getting to that, Gideon. So your stop loss would be at the 138.2 level, or maybe slightly above, because you need some space, some buffer zone. Sometimes it will go a bit further. And also depending on what's your risk appetite, you could be a ratio of, it could be in a ratio of 1 to 3. So it's all depending on your risk appetite. But usually I would place my entry here, my stop loss at 138 or 141, depending on what risk level you are at. And then take profit is usually at the 100%. And depending on all other indication using the other tools like your expansion, projection, your support levels, key levels, all that, you can adjust accordingly. Yeah. Okay. Okay, so this is a live, that was a good example on the Fibonacci extension. So maybe now I can go on to ICG. Okay, let's try GBP. Okay. Okay, GBP USD, let's see. Okay, now we have to look for the Nike tick. Actually, this could potentially catch my attention because remember the tip that I gave you guys, always look for the V and, yeah, I will draw here. Okay, so now it's almost touching the 100% Fibonacci retracement level. So once it actually breaks this level here, it will have my attention because it's quite bullish in this sense. It's quite bullish. So I'm thinking it might be going up to test at the 127 level since the overall might be a bearish trend. So okay, let's use the Fibonacci retracement to see whether there are other indications that confirm this trade. Give me a sec, yeah. Okay. 78.6. Okay, this is quite a good level. So you can see here, let me just adjust the chart. It's slightly messy. I want you guys to see. Okay. So at this level here, you can see that, okay, this is the 127.2% extension level from this V that I have charted. This is also a key major overlap support or resistance. I will highlight this. Okay. So it coincides together. And then it's also a 78.6% retracement level from here, my top to my bottom. So potentially it will be a very good setup if the price can break this 100% retracement level. So what I'm thinking is prices might go up, break this level. My entry will be here for a short. And maybe I can type up. Okay, here will be my entry level for a short position. My take profit would be somewhere here. At this level, take profit. sorry, this is my stop loss. My take profit will be somewhere below. Take profit will be here. Sorry, guys, at 100% or slightly above, depending on your risk appetite, like I've mentioned. Yeah. So for retracements, actually, you can't rely on using it alone. So you have to use it together with your other tools like your support resistance, maybe your Ichimoku or your expansion projections. It can't work on its own. So please take note. So for GBP USD, my analysis would be if it breaks this 100% level, it will go up to test at the 127.2, which coincides with the key support resistance level, overlapping support resistance, you can see here, as well as a 78.6 retracement level. So there are three tools that I've used here to confirm my trade if it actually passes this mark 100 level, 100%. Okay. So any questions? Hi, Samuel. Which broker am I using? Okay, I'll get to that later. While you NL, what do you mean by NL? My Adi, sorry, yeah. Adiomo asks, can you give us your setup? What do you mean by give you my bit setup? I don't quite understand. Okay, let us try. Let me go to the next one. Here we try go, yeah. Let's do an analysis on go. Okay. Can you guys identify where is the Nike tick? How to set up? How to set that on TradingView? Oh, Adiyamo, you mean for which pair? Which pairs are you referring to? Let me know in the comment while I do the goal analysis, yeah? Okay, so let's look for some examples. Okay, let's try this. Okay, I think this would be quite nice. Okay, let's zoom in. All right. Okay, so for example, let me chop off here. Okay, things to take note when you draw your. I will get to that, well. We still have plenty of time, yeah. Okay, so for this gold USD setup, let me show you another one. Okay, when you draw your Fibonacci extension, okay, all fibs. Okay, Nike tick, remember, always remember that your Nike tick can be in this manner or in an inverted. So don't always aim for a tick that is this way. You can also do the opposite this way. Yeah. So one mistake or one tip that I can give you is that when I mean inverse, it doesn't mean this way. This is wrong. Yeah. Let me pin the chart. So this setup here, okay, remember, always look for the V. Okay, so once, shoot. I'm so sorry, guys. Bear with me. Where is my setup? Okay, let's try this. Okay, let me show you an example again. Okay, remember my tip, always look for the V, yeah? Okay, as you can see here, once my price is very close to my 100%, it will get my attention to look out for the Nike tick. Okay, so once it touches, Okay, this is quite fast. I need to, okay, for example, okay, so once it actually touches my 100%, you can create a pending order as well. So once it, or a notification or alert. So once it hit my 100%, it will take my attention when I will actually zoom in on this analysis, or to take an order, take a position, or put a pending position. So once it touches my 100%, you should actually zoom into it. So from here, like I've mentioned, you can't always only use one tool, like the Fibonacci extension. You need other tools for confirmation. So let's zoom out. Okay, maybe you can do a retracement level, for example. Okay, this is very messy. Sorry. Let me clean it up a little bit. 127. Okay, so here, so the other tools, you have to zoom out to see whether there are any other support or resistance level or overlapping support resistance. So for example here, okay, that's quite far. Okay, actually this would be a key highlighted levels. Okay, actually I will draw this. Let's try. Okay, that's not that great. That's not that great. As an example. Okay, never mind. Okay, we'll just move forward with this. I'll focus more on the extension. So once it breaks the 100% level, I will take note to see if it actually goes to, oh, so this will be the level. So at this level, you can actually place it slightly above the 127, because not all the time it will hit exactly the 127.2 extension levels. So your order could be slightly above here. It could be slightly above, maybe here. And then your take profit would be, my take profit is always at 100% level. And then your stop loss might be at the 138.2 or slightly further, depending on what's your ratio or what's your risk appetite. Okay, so to reiterate, whenever you are looking for an extension setup, look for the V. It's very important. Always look for this V or a Nike tick. It can be inverted, it can be this way, but always look out for the V, and it always have to break the 100% level before you actually zoom in. Okay, Joel asks, what's the name of this fig you're using to get 127? Okay, the tool that I'm using is called Fibonacci retracement. All these levels, okay, maybe I do a recap again. So all this expansion, they are actually Fibonacci. We actually use the Fibonacci retracement tool. It's just the levels that are different. So for example, okay, let me do this. Okay, if you guys can see. Okay, like I've mentioned in my slides just now, levels between 0 to 100. 0 to 100. This level is called the retracement, Fibonacci retracement, because it helps you understand where, at which point in time or at which percentage the prices might reverse. So Fibonacci retracement tool, it's to let you know where it might reverse. It's a reversal tool. So for example, let's say here, it's testing at the 23.6%. So once it breaks, this is invalid. And then it comes here to test at the 61.8%. So once it breaks, this is invalid. So for a Fibonacci retracement tool to work, it has to be below, for example. Okay. Oh, this is not right. For example, here. Okay, let's use this example, yeah. Okay, you just focus on, okay, let's focus on this area here. Okay, so ignore this part. Oh, shoot. Okay, so for Fibonacci retracement, 0 to 100 level, okay, it's currently testing this level. So it hasn't break the 38.2 level. So this is still valid. The 23.6% level is actually broken, so you can remove it. So technically, for this retracement tool, only 38 and below, like 38, 50, 61, and 78. Only those below here will be valid. Those that has been cut off or retraced already is not valid. So the only valid level is the 38.2%. So this is the typical Fibonacci retracement. So for the rest of it, so like I've mentioned, for the rest of the tool, yeah, let me draw. It's inverted. Sorry, give me 1 sec. Okay, so for the rest of the tool, for example, okay, you can see here, there are the negative zones. The negative zones. So this is the positive, the 0 to 100, this is the normal Fibonacci retracement. Anything that is below 0, which is in a negative zone, are called Fibonacci expansion, which we will learn in the next session, not now. And then what we are learning today is Fibonacci extension, those that are above 100%. So once your levels are broken, like I've mentioned before, the V, remember, once you have broken the typical 100% for your Fibonacci retracement, whatever that is above are called extensions. Whatever that has broken your 0%, these are called expansions. So we usually use these 3 tools to help us better understand where our positions should be placed more accurately. That is called Fibonacci confluence, which we will learn in the next session as well. Any questions so far? So for Joelle, the name of this Fibonacci is called extension, but technically the whole chart is called Fibonacci retracement. Just that anything that is above is extension, anything that is below is expansion. Okay, now let us maybe move to, I hope that clarifies, yeah? Any more questions, feel free to post. Okay, you're welcome. Yeah, GBP. This is a tough one. Here, let's see. For Fibonacci retracement, usually we will look at the H1 and H4, not so much of the lower time frame, like 5 minutes, 15 minutes, because it will be too choppy, and we always look for significant swings. So for this chart, let's see. Okay, give me a minute to help you find an example. Okay, so like I've mentioned, right? Okay, maybe this might be a good example. Okay, Fibonacci extension don't always work 100%. So you can see here that this might not be a good setup because the swings are not very significant. You can try this. Always look for the V, yeah. It can be an inverted V as well, like I've mentioned. This one might. It can be an inverted V. Okay, let's see. It's tricky. So let me see whether this is a clean setup. That's a good example. Like I said, right, you always have to use other indicators as well. It's not solely just the extension. It might not be that accurate. It might give you a false confidence of a trade. Okay. Another good example. Okay, Aisha, I will get to that later on. Maybe let me just find a good setup here as an example for you guys before we end the session on extension. I'm trying to give you guys a good example, a clear one. Okay. Always look for the V. Okay, maybe this is not a good example. I will give you guys another one. Maybe we can try USD. How about this? Okay, we are running a bit short of time, so I'm trying to give you another good example so that you can accurately use this tool yourself while you test it out at home. You can also do back testing if you would like to. Okay, this is quite a good. Okay, let's try this. Okay, this is a good example. So like I've mentioned, always look for here. Okay, so at this point in time, I will take note since the reversal is quite strong here. So once it touches my 100% or surpasses it, it will have my attention to actually see whether I would want to take a trade at the 127 level. Okay, you can actually zoom out to daily or weekly to give you a double confirmation. Like I said, you can't use it on its own. Okay. See whether there's any key support or resistance level to support your trade. Okay. Okay, then you move forward. Oh, sorry, I should zoom into the 4 hours. Sorry, I was on a daily time frame. It's hard to see. Okay, so once, sorry, it's very, very messy. Give me one sec. Okay, here. Okay, so once it actually surpasses my, once it actually passes my 100 mark, I will then take note to see whether there are other tools like your support resistance or your retracement tools that coincides with this 127.2% level to make it a strong sell. So these are the two key levels that I will advise you to take note. So this one came in quite accurately at the 127.2. So you can see a very nice reversal. My usual will be short here or slightly above to give it some space. Sometimes it might exceed. My stop loss would be also slightly above, depending on your risk appetite. And then usually take profit is at 100. Or if you feel that the trend or the retracement might be strong, you can go slightly further to take your profit here. So Aisha, that means we take or place position only at extension levels. Yes, because anything that is between 0 to 100 is still considered a retracement. So only take note once it breaks this level. This should be a level that will alert you to take any positions if it reaches the 127. So maybe let me reiterate. For Fibonacci extension, it's actually a reversal tool. So we are looking to pick short positions, as you can see here. Hi, Isaac. You came in a bit late. So, okay, I'm coming towards the end of the session. I need to let you guys know that if you missed, because I've seen like some participants that came in or the attendings that came in very late, if you want to rewatch or relearn for a refresher course, you can go to ironfx.com to check out the recorded version of this webinar. Okay, you should be able to find this recorded video here on the past webinar. Click on English. So it should be posted here in the next couple of days. So I hope you guys find this educational video useful. I have tried my best to actually let you know, impart all my skills. Do let me know if you have any other further questions before I end the session. So 2 things that I want to leave with you guys is that you should always look for the V and always take note that it should pass the 100% level, retracement levels. So in the next session, please tune in. We will be talking a bit about expansion and confluence. Thank you, Kingsley. Thank you guys. Joa. Oh, I'm Annabelle. Yeah, thank you. I'll see you on the next session. See you guys. Okay, for Guillermo, how do I set those figures? On TradingView, it's actually highlighted for you already. So maybe you can try it on your system. I'm not sure what you're using, but you can try to place your Fibonacci retracement. You try to use it on your system and see what levels they give you. It should be preset and default.
everyone, my name is Emily, and in this video you will learn what is CFD trading, how it works, as well as some types of CFDs. CFDs, also known as contracts for differences, are financial derivatives that enable traders to speculate on the price movement of assets without actually owning them. For example, when a trader buys one CFD of Microsoft, it means that they buy a share of Microsoft. The only difference is that the trader doesn't own the share. A CFD is a contract between a buyer and a seller that shows that the former must pay the latter the difference between the present value of an instrument and its value at the contract time. A CFD contract's value is determined solely by the price difference between the entry and exit points of the trade, not the asset's underlying price. CFDs exist for currencies such as Euro against USD or GBP against USD, indices like US 500, equities such as Apple, and commodities including oil, sugar, or silver. How do CFDs work? Traders can essentially use CFDs to speculate on whether the price of the underlying asset or security will increase or decrease. They have the option to speculate on upward or downward movement. The trader who bought the CFD will put their holding up for sale if they see an increase in the asset's value. The purchase price and the sell price are combined to determine the net difference. The investor's brokerage account is used to settle the net difference, which represents the trader's profit. On the other hand, an opening sell position might be taken if the trader thinks the asset's value will decrease. Thank you so much for joining us today. Stay tuned for tomorrow. Bye-bye.